The Holiday Guide to Preventing Elder Financial Abuse, Protecting Seniors from Investment Fraud. The holiday season, while a time of joy and togetherness, unfortunately also brings an increase in financial fraud targeting vulnerable populations, particularly seniors. The holiday season, while a time of joy and togetherness, unfortunately also brings an increase in financial fraud targeting vulnerable populations, particularly seniors. This comprehensive elder financial abuse guide for the holidays aims to educate families on investment fraud by brokers or advisors affecting the elderly. Read on for essential information on these threats and resources available to combat elder financial exploitation. By understanding how these threats manifest and target their victims, we can safeguard our loved ones from financial exploitation and the emotional distress of losing your life savings. At the end of this article, you should be well on your way to protecting the seniors in your life and feeling armed with information on how to file for financial abuse for them. Types of investment fraud targeting seniors. Unethical brokers and investment advisors, exploiting your trust. Investment fraud targeting seniors is often perpetrated by unethical or corrupt brokers and financial advisors. These fraudsters may use their professional credentials and seemingly legitimate backgrounds to gain the trust of elderly investors. They might offer too good to be true investment opportunities or use high-pressure sales tactics to convince seniors to invest in unsuitable or fraudulent schemes. It's essential for seniors and their families to verify the background and credentials of anyone claiming to offer financial advice or investment opportunities. You can easily check whether a financial advisor or stockbroker is properly licensed and registered through official channels discussed later in this article. Remember, it is your brokerage firm's legal responsibility to monitor their brokers and ensure that no elder abuse is happening in your broker-investor relationship. If it has, then you may have a legal claim for the losses you have suffered as a result. Unsuitable elder investment recommendations. Some unscrupulous investment advisors make unsuitable recommendations to purchase investment products that don't meet the investing objectives and means of an elderly investor. This might include selling speculative investments such as options, futures, or penny stocks to a retiree living on a fixed income. These recommendations often prioritize high commissions for the advisor over the best interests of the senior investor. Complex investment schemes. An important topic we want to discuss in this elder financial abuse guide is that fraudulent brokers or advisors may promote complex or exotic investment opportunities that promise high returns with little to no risk. They might use professional-looking websites, fake testimonials, and high-pressure sales tactics to create a sense of urgency and legitimacy. Common types include Ponzi schemes, pump-and-dump stock fraud, and cryptocurrency scams. In fact, cryptocurrency investment fraud losses rose from $907 million in 2021 to $2.57 billion in 2022, a massive increase of 183%. Red flags of investment fraud. The SEC's Office of Investor Education and Advocacy has identified 5 key red flags that seniors should look out for when making an investment decision. Promises of high returns with little or no risk. Unregistered or unlicensed sellers. Pressure to buy quickly. Guaranteed returns. Lack of documentation. Protecting seniors from investment fraud. Education and communication. Protecting elderly parents from investment fraud requires a proactive approach focused on education and open communication. Families should have regular conversations about common investment scams, emphasizing the importance of verifying the credentials of financial advisors and being cautious of unsolicited investment opportunities. Create a supportive environment where seniors feel comfortable discussing any suspicious financial activities or pressures they may be experiencing. Encourage them to seek a second opinion from a trusted family member or independent financial advisor before making significant investment decisions. This is especially important if your loved ones are particularly at risk, judging by the risk factors they display. Verify credentials and use official resources. Always verify the credentials of any financial advisor or broker. Use official resources such as FINRA's Broker Check or the SEC's Investment Advisor public disclosure website to confirm that the individual is properly licensed and registered. Be wary of senior specialist designations. Be cautious of financial advisors who use senior-specific certifications or designations to imply that they have special knowledge in senior financial matters. While some of these credentials are legitimate, others may be used to mislead seniors. Always research the specific designation and the requirements for obtaining it. What to do if you suspect investment fraud. If you suspect that you or a loved one has been a victim of investment fraud by a broker or advisor, document all related information, including communications, account statements, and any promises made. Consult with an experienced securities fraud attorney that is well adapted to elder financial abuse cases. Victims of elder financial fraud by financial advisors may be able to recover their losses through FINRA or securities arbitrations. Remember, protecting seniors from investment fraud requires vigilance, education, and community support. By understanding the tactics used by unethical brokers and advisors, being aware of red flags, and utilizing available resources, families can create a strong defense against fraudsters. As scammers continue to change their tactics, taking decisive action is essential in safeguarding the financial well-being of seniors. While you can always come back and reference this elder financial abuse guide, you should work with a professional to take the next steps, such as filing a claim. If you or a loved one has fallen victim to one of the tactics discussed here, please reach out to an experienced investment fraud attorney immediately.